What's up guys, welcome to a new video, welcome to my YouTube channel. How are you all doing? I hope you're doing good. I'm doing fine. In this video I'm gonna go over backtesting, one of the most important things in trading and also one of the most boring things in trading. Everyone tries to avoid it, everyone wants to avoid it, nobody wants to do it because it takes a lot of time, takes a lot of energy. But like I said, it's one of the most important things. So I'm gonna go over the rules and how me personally backtest. So by saying that, let's just jump right into the charts. So to start with, what is backtesting? Backtesting is all about reviewing past price actions to see how well a strategy of yours would have worked in the past. So why is this important? Because if you have a strategy, let's say your strategy is support and resistance, or you use ICT concept, it doesn't matter. Let's say you use ICT concepts and you go with fair value gaps and liquidity sweeps and breakup structure. You're gonna look into the past and see every time there is a liquidity sweep, breakup structure and fair value gap, you're gonna look at how it would have worked out. And this is really important because you build confidence like this. Because after doing it 50 or 100 times, you'll be like, okay, it has worked, let's say 60 times, and it didn't work 40 times. Now you know, like, it's a 60% win rate, and you know, you're just building confidence. So that's just what backtesting is. It's reviewing past price action to test how well your strategy would have worked. Now, when it comes to swing trading versus day trading, if you do swing trading, you should go as far as 3 years in the past, and if you do day trading or scalping, my recommendation is to go as far as 1 year. If you do day trading or scalping, since you most likely entering trades on the lower time frame, you don't need to go 5 years back. It's just unnecessary. Go as far as 1 year. At least 50 to 100 times. Guys, do it 100 times. There are people that do it 50 times, but I don't know why. Maybe it's because they don't want to do it, because it's fucking boring. It's like, backtesting is really boring. But do it 100 times. I also do it 100 times. And the majority of the people do it 100 times. But if you feel like, nah, then it's okay. You can still do 50, but I recommend doing it at least 100 times. Don't cheat. If it didn't work, it didn't work. Okay? So I'm gonna say what I mean with this. If you look at the chart right now, and for instance, here, this is just an example. Let's say your entry is of a retest of a fair value gap, just that. Never go only by a retest of a fair value gap, but this is just an example. What do we have right here? Right here we have this, oh shit, we have this fair value gap, right? Let me make it a little smaller for you. Yeah, we have this fair value gap right here. So let's say that your strategy is just entering of a fair value gap, which again, never just enter of a fair value gap. This is just an example. We can see that it went down, it retested the fair value gap, and let's say your strategy will be once again not close outside the fair value gap to enter. So now we can see, okay, this candle closed outside. So let's say in this case you would go long, right? By the candle closure outside the fair value gap. You put your entry right here, right there. And where would you put your take profit? Maybe these highs, I don't know, depends on your strategy. You're gonna put your take profit, and then you're gonna put your stop loss. And as you can see, in this case, this strategy would not have worked. Why? Because you can see the market reversed and went down, hitting your stop loss, which was under the fair value gap. In this case, don't cheat. And this is what I mean. Don't be like, okay, but I would not have entered because blah, blah, blah. You know, it was an uptrend, so you would have gone long if this was your strategy. So don't be like finding excuses of reasons of why you will not enter, because this is very typical, guys. Just, okay, if this was a loss, you write down it is a loss. Okay, and the fifth rule that I personally would recommend to anyone is that when you write down the losses, look for patterns in losses, like, okay, maybe you lost because you were trading against the trend, or maybe you lost because the higher time frame trend was the opposite direction. You know, find patterns in your losses so you see like, okay, I should avoid these trades when this happens. Okay, now that you know the rules of backtesting, I'm going to show you an example, and this is how you track your data. First of all, I'm going to do this without the bar replay because I know a lot of beginner traders don't have enough money to pay TradingView Pro, so I'm going to do this without the bar replay tool. I know it's very useful, but me personally, I also don't like to use the bar replay because you're kind of stuck at one time frame, so. But anyways, once you track your data, so once you go with backtesting, you want to write down all of the times that you backtested. So the 100 times that you did it, the trade, you're gonna write it down 100 times. So it doesn't matter if you write it down in a notebook, if you write it down on the computer on a Word document or an Excel, it doesn't matter. Do what is best for you. Me personally, I just write it down in my notebook with a pen because I like to write down. I just get it stuck more in my head easily. So once you track your data, and this is what I mean, is once you start to write down the result of the trade, you're gonna write down the date that this trade was, the time this trade was, the pair, the time frame, the setup, the stop loss, take profit, and entry, the outcome, so if it was a win, a loss, or maybe a break even, and risk to reward. Now, one thing, guys, if you only trade New York session, I'm going to show you an example on how to backtest, but if you only trade the New York session, you're just going to be looking at New York session. You don't need to go through Asian session and London session if you are asleep. If you don't trade these sessions, just skip it. If you trade only London session, you're gonna go to the past in London session. Why would you go through New York session if you trade London session and then make results based on New York session when you only trade London session? You understand what I'm saying? That doesn't make sense at all. So now, to show you guys an example on how to backtest, I'm gonna say, let's say that, to put an example, your strategy is liquidity sweep and break of structure. So higher time frame liquidity sweep, break of structure, reversal. Let's keep it with that. Higher time frame liquidity sweep, break of structure, and reversal. Now we're gonna look like this at the chart, okay? And for example, we're gonna go to the 1 hour time frame, and to put you guys this example, we see we had this high right here before it got manipulated. So you're gonna mark that out. We have this high right here. There, more or less, okay? I know it didn't touch correctly, whatever. So now you can see we have a higher time frame liquidity sweep. Now you want to look for a break of structure reversal on the lower time frame. For example, you're gonna go to the 5 minutes and look. Okay, we had this high which gets taken out, and what does price do after? Reverse. So then we're gonna look, for example, for a break of structure. Where can we see the break of structure? We see the break of structure right, let me check. Okay, so we only get the break of structure with this candle, but now we have higher time frame liquidity sweep, break of structure, and you're expecting a reversal. So this will be your strategy, for example. So let's go short here, and now you're gonna do like this. You're gonna put your entry, which will be right here, right there. Now you're gonna be like, you have to be real with yourself. Like, okay, where would you put your take profit? Where would you put your stop loss? So in my case, I will put the stop loss above this high a little bit, and my take profit could either be here or maybe here. I like this more because it's the equal lows. So I will put my take profit all the way like there, something like this. Okay, and then you look, would we have won this trade? Yes, we would have won this trade. You can see that it played out clearly well. So what we're gonna do now, we're gonna track the data. We're gonna write down everything. So the date, what was the date of today? It was Tuesday, 15 July 2025. So we write that down. 15 July 2025. Time. What time was the entry? Okay, I can't see it correctly, but let's say 10:36. 10:36. On what pair? What pair are we backtesting? Euro, USD. USD. On what time frame? You can put 1 hour because it was the higher time frame liquidity sweep, and you entered on the 5 minute. Setup. What was the setup? It was higher time frame liquidity sweep, break of structure, and we expect reversal. Okay, that was our setup. Stop loss, take profit, and entry. Take profit, you can put your entry, like you put your entry exactly at break of structure. I'm not gonna write this down. Entry on break of structure, stop loss above the last high. What was it? Yeah, above the most obvious high, we can say, and the take profit equal lows. So you write that down too. Outcome, we would have 1. And risk to reward, don't forget about this, really important. You can just click on it and you can see risk to reward ratio 2.09. So you can write that down too. 2.09. And that's it. And you're gonna do this 100 times. Okay, so to put you guys on another example, again, we are just on the 1 hour time frame. We have like this relatively equal highs, right? So let me just mark that out here. I'm gonna go back in the 5 minute time frame here, and we can see, okay, we have all these equal highs kinda. What does the market do? Move a liquidity sweep, and then what? You wait for a break of structure. Where is the break of structure? The break of structure will be, let me see, right there. So we're just gonna do exactly the same thing. Okay, so we do the same thing. Where would we have put the stop loss? We would have put the stop loss, in my opinion, maybe here. And to take profit, I would have put it somewhere here, there, in this drawn liquidity. Okay, and this is also like, don't cheat, guys, because now you can see, okay, the market just kept going down. But don't be like, okay, I would have put my take profit here, because you see that the market went there, or all the way down here. You have to be honest with yourself. So like, okay, in reality, you see like this, right? You see, you don't even see this, you see like this. Where would you put your take profit? I would have put it here. Even if the market says that it went all the way down, you have to be honest with yourself. And that's it, guys. You're gonna do this 100 times. And I know it's boring, but it's really necessary. It builds up confidence. It proves if your strategy is profitable or not. And you cannot skip this. I know this, no one wants to do it, but you can't skip this. And that's it, guys. I tried to make this very simple and just backtest. That's it. If you like this video, hit the like button, subscribe on my channel. I'm gonna keep updating every week a new trading video explaining everything very simple. So you don't need to go through all the complexity that it's online. I'm just gonna keep it real. And that's it, guys. See you in the next video.